Hello, welcome back. I'm with Joe Mazumdar, the editor and analyst over at Exploration Insights. Joe, good to be with you.
Great, thanks for the invite.
This has probably been quite an interesting PDAC in my perspective, because I started off on Sunday talking about the macro level of what's impacting gold on obviously Russia-Ukraine. We saw the Oval Office blowout, we saw summit in London and everything else. And then yesterday we saw the tariffs were actually definitely coming back on, and there was a blowout from that. And now today we're back and we're trying to analyse everything and trying to understand what's going on in the market. We've just seen gold's obviously gone back up again, had another correction. How are you reading the signs at the moment? This is just crazy times, right?
Yes, it's very volatile, and there's a bit of a divergence between industrial metals and gold.
Yeah.
And some of it is like the tariffs coming in. And the economic theory suggests it should be inflationary for the one that's imposing the tariffs, because obviously Canada, Mexico, and China, they're not paying an extra 25 or 20%. Somebody else is, and the amount that they're spending to mitigate the cost increase for the consumer is really the inflation. And will that consumer pay that? And the whole idea is to regenerate manufacturing capacity in the States, for that reason, which would take a little while to do. But in the interim, some of the theory suggests that even if you impose tariffs on products coming in, the products that are local will raise their prices almost to meet that price. So there's not that big of a discount between domestic and what's coming in. And I've heard on the Chinese side that they were expecting tariffs of about 60%. Yeah. So for them to get 20 was actually a positive.
Yeah.
So I think right now the sentiment, if we're talking about the non-cash flowing juniors, the sentiment on some of these industrial metals is negative, such it'd be harder for them to raise money. The sentiment for gold, given the uncertainty and that helps gold. But problematically, if it drives inflation, then we should see potentially higher rates. And if we see higher rates, real rates should actually increase, and that should theoretically be bad for gold. But what's really been driving gold last year was a lot more central bank buying.
Yeah.
And so the more uncertainty, the more those banks are getting out of the US dollar and buying gold. So it'd probably be still good for the cash flowing producers. Be still difficult for the juniors trying to raise capital to do stuff.
Yeah. It's funny, isn't it? You're right, because this inverse relationship between interest rates and gold and whatnot, it just sort of almost doesn't exist anymore.
Well, it didn't. I mean, there was only a moment last year, maybe 3 or 4 months, when the idea was that interest rates were going to get cut, and they did. There was like a 25 basis points change, I think it was in September or something like that. So that led up to the Precious Metal Summit, and so gold was doing well, and so that way you would have U.S. institutional investors buying gold, and that trickled down into equities. But if it was central banks buying or Chinese retail buying gold, that didn't translate to equities.
No, exactly.
So that's the big disconnect people are talking about. It's not the same people buying.
Yeah.
But if you do have the real rates going down, then those institutional equity guys would buy gold, and that would trickle down to gold equity ETFs, senior gold producers, increased sentiment for all these other people here.
Yeah, just going back to the tariffs that we saw go into effect, so I guess as of last night. Big pushback from Canada. I don't know if you saw the Ontario Premier.
Yeah, threatening to shut the power off.
Threatening to shut power off, threatening to shut off gas, asking Saskatchewan to shut off potash, asking them to shut off the uranium supply.
Yeah.
What sort of impact, if Canada does go wall to wall and really does push back and retaliate, what does that do to the metals industry? Because obviously Canada is a huge metals industry.
Yeah, I mean, it's not something I would do because we need to make money. And so what we need to do is keep selling them what we can, and then make our supply, being Canadian, when I say our, make our supply chains better and our distribution better. So while we're still doing deals or selling to the States, we are also selling to other people.
Yeah.
And because the trade with the States is no longer beneficial, then a deal with another country would be something that we'd easily do.
Yeah.
But the problem with power in that, it can't go anywhere else. You know, the problem with the power, the gas pipelines is that's, you know, you can't just turn that one off and it's going to go to China.
Yeah.
We have to build that pipeline, and we didn't build it when we should have. And so the hope now is that all the inter-provincial tariffs that we have and all that reluctance to do things like that might be gone. So those barriers will be good for Canada to lift internally in terms of what we're doing. But that transition will take some time. But it will take probably more time probably for the US to build up that manufacturing capacity that they've lost in the last 2 decades to the Chinese.
Yeah.
That'll take longer.
Yeah.
And they don't have the skill set either. So they have to build up the skill set, and they also have to build up all that capital investment in it to actually build it. And some of that will happen because these guys will go, well, you know, I'm not going to build that plant in Mexico because I got a 25% tariff. I'll build it now in the States.
Yeah.
You know, that sort of stuff will happen automatically, but building your own capacity, but all that will translate to inflation now. Because the reason the States didn't have inflation for the longest time was they didn't have that increase in wages. And that's because all those, you know, high-paying jobs in manufacturing didn't exist.
Yeah.
You know, and so people's wages were flat. But you'll bring that back, and that will hit people's bottom line.
Yeah, okay. How do you see this playing out in terms of because you were just talking about earlier, obviously gold equities, as well as sort of the other industrial metals. It seems like the junior space still it's quite tough times, even though gold price is, you know, teetering on 3,000. Yeah, but I think you highlighted exactly why that is, because the people who are buying gold obviously aren't the ones buying gold equities, right? And
the retail sector specifically is literally and figuratively dying here.
Yeah.
There's a better market on the ASX than there is on the TSX.
I'd agree with that, yeah.
And a lot of these companies are considering listing there. And then the other issue in Canada is the Chinese bid. And you see companies like Solaris and others considering not delisting, but re-domiciling. Even Barrick's talking about that.
Yeah.
You know, so there's a lot of things happening right now, and we're making ourselves a lot less attractive to that sector as well.
Okay. So are you of the, when you're looking at the equity space in mining, are you just stick to your cash flow in assets and maybe see how this all pans out?
I'm thinking that the opposite is that
the guy on screen, that's me, Ken Konkin. I'm the president and CEO of Tudor Gold Corp. I co-discovered the Brucejack mine in Canada's Golden Triangle with my colleagues Joe Ofsnick and Ken McMoRan. And in 2021, Brucejack was purchased by Newcrest for $2.8 billion. We have reassembled the team, and we have made another significant discovery just 15 kilometers north of the Brucejack mine. The Goldstorm deposit today hosts approximately 28 million gold equivalent ounces, including close to 3 billion pounds of copper, making it one of the largest copper gold discoveries in the past 30 years. Initially, Goldstorm appeared to be a large-scale bulk tonnage target. However, recently we had a major breakthrough when we discovered a new complex carrying high-grade gold, hitting in excess of 20 grams per ton gold with intercepts of over 25 meters. Visible gold observed throughout the core suggests the possibility for excellent gold recoveries. Our next steps, it's all about high grade, and more high grade. We plan to expand and explore the potential of this new spectacular high-grade gold system, which initially was one structure and is now 4. The history of the Brucejack story seems to be repeating itself. We believe we are on the pathway to demonstrating another multi-billion-dollar project in the Triangle. We would be honored to have you follow the journey as we intensify our exploration efforts in 2025.
Because of the tariffs and all these barriers to entry, I don't know who's going to get impacted by what.
Yeah.
So I probably want less people that are on the cutting edge of being impacted by changes in policy. I almost want to go back to grassroots exploration, pick good teams, with low cost of capital because they can attract capital, and go with them. Their timelines are longer. They're not worried about supply chains and stuff like that, or tariffs or anything like that. They're just doing discovery because there's still a gap of high quality projects. And most of these people that are doing meetings, they're not doing meetings with investors as much as they're meeting with industry. So it's industry talking to industry.
Yeah.
And now that at least the gold sector has money, and the copper sector needs projects. So to feed that pipeline is really where I'm going back to now. Because most of what Exploration Insights portfolio has done well on has been in grassroots exploration discoveries this year.
What did you mention in there that you've got to just pick the right management?
And it's not just the CEO has to be a geologist or the CEO has to be it's about a good combination of technical access to capital, excellent share structure, and people know how to control their share structure, know who the top 10 shareholders are, all that sort of stuff. They know which conferences to go to. They're not going to all of them. Yeah. They're not blowing their G&A. Yeah. So all of that comes into refining not so much potentially the asset that they're exploring right now, but gets you some insight into what they could have. Yeah. And you're paying as if they had nothing.
Yeah.
But you get the management team, you get the low cost of capital, and you get them knowing where to go. I don't have to tell them what to do. I'm not a consultant for them. They should know, and I want to pick those guys.
Okay.
Yeah.
Why don't we look at a few more metals that are a bit more specific? Lithium, for example, obviously we had that big sort of, again, we were talking on the show a couple of days ago where someone referenced that lithium's acting a little bit like Bitcoin in a way, where you sort of have these large peaks and then crashes and peaks again over the last few years.
I don't think so, because Bitcoin is not, it's a speculative thing.
I'm just saying if you look at the charts, you see these big rises and falls in lithium.
Yeah, right? But that's very much supply-demand driven on lithium.
Yeah, of course.
Oversupply, and potentially lower demand, because less EV penetration in some places, like especially the States.
Yeah.
And now if you remove the IRA benefits of buying an EV, you're not going to.
Do you think Trump's going to do that? Do you think?
Absolutely.
Yeah.
Absolutely. He hates EVs.
Okay.
And if you look at his chart in terms of the states that voted for him, and those are the states with the lowest EV penetration rates.
Okay.
There was only one state, I think it was Nevada, that had a decent EV penetration rate. So that's not his constituents. Well, the people that are buying the Teslas are not his constituents.
No, but I think some of from what I had heard from some analysts was that the IRA funds, in terms of where it was going into employment and infrastructure, was in some of his constituencies or in Republic.
Yeah, he's also trying to curtail the money already allocated to EV infrastructure to give to something else.
Right.
Because it's already been approved, but he's just diverting it.
Okay, but the EV market.
He doesn't believe in the climate change stuff. He says that's a hoax.
Yeah, well, there's quite a few politicians on the Republican side.
And I'm not totally into it either.
Yeah.
All I'm saying is that that's part of his agenda.
Yeah.
Okay, people that have doubted what he would do, we're sitting on the other side of that with the tariffs.
Does that really matter? I never really saw the US adapt to and adopt EVs.
You're right in the sense that
anyway.
They're not going to be the biggest impact.
No.
Because they were already very low. Even California didn't have the penetration rates, but they needed the infrastructure.
Yeah.
And that idea was to build the infrastructure.
And then it would follow.
Then that would follow. You build it and they will come.
Yeah.
But now you're not building it, and then you remove the incentive to buy it.
Yeah.
And now you're raising the tariff, and you don't even have the cheap Chinese EVs coming in. So if you go around the world, and you're outside of North America, or at least out of Canada and the US, go to Argentina and a lot of these other places, you see a lot of Chinese EVs everywhere.
Yeah.
People love them because they're like 10 grand. It's just ridiculous. So if people are really keen on climate change, they should just take away the tariffs and let all these Chinese vehicles come in. But they're not.
Yeah, well, we're not in this world anymore where there's free markets in that sense. Yeah. It's protectionism.
But that EV demand, so some people I was talking to, it's sometimes not only EV penetration, which is what we talked about, and the lower impact of the US having potentially a lower penetration rate because it was never a growth. The other thing is that the actual purchase of vehicles is going down.
Yeah.
The overall volume of sales of vehicles is reducing, and that's impacting palladium and platinum, and then the EV battery is not only being impacted by the demand for EVs, but also the change of the technology. So the problem in any kind of world is technology is not constant, and people can build around things. So the Japanese don't want to compete with the Chinese in terms of their battery technology. They'll do something completely different, which is what they're doing, and they'll build their fleets completely different than the Chinese.
It's funny, I like talking about the EV market in a way, because obviously, like I said, we have seen peaks in it, and now it's oversupply in a lot of these metals. You see a lot of Chinese dominance in things like nickel processing, manganese processing, graphite processing.
We can't compete.
No.
There's really good charts showing how we cannot compete on most of the processing that they have. Cost-wise, we are nowhere near it.
So I just wonder, how much can China continue scaling up and in terms of the downstream, so that the metal prices within the EV sector are suppressed for a prolonged period of time? Is that, or do you think that we're bottoming out and we might?
Well, if you look, if you go by the actions of the industry, you see on the palladium market, you see Implats deciding whether to shut down Lac d'Ile, which they bought 5 or 6 years ago, I think it was, for a considerable amount of money. I don't know what the number was, but they're considering shutting down that mine. Right. And also on lithium, I think Sibanye-Stillwater was going to do that Ioneer project, Rhyolite Ridge. They don't want to do it anymore. Yeah. And they also pulled out of those nickel projects in Brazil where they had the clash with Appian. Yeah. So if you go by what's happening, and the people that are on the cutting edge of spending money in terms of directionally where they want to be, they're not going into those commodities.
Okay, because one follow-up question to that, I guess, would have been, if China can continue to sustain lower prices and whatnot, I guess the opportunity for the West probably isn't really there anymore, is it, in terms of?
Well, I mean, even if we had a level playing field, which we'll never have, and we sort of build our manufacturing capacity, I don't think anybody in their right mind thinks that anybody in the West will be ever as competitive as the Chinese.
No, I agree.
Yeah. That's never going to happen. And these guys were thinking that, the U.S. would impose 100% tariffs, and they're happy with 20.
Yeah. God. Well, that's not great news for critical mineral explorers, is it?
No, but the thing is that everyone still talks about it, and we've got this lag of sentiment, of governments pushing something that it's almost like you're pushing it right off a cliff. It doesn't matter. Unless, because the Chinese still care about it, so they'll still be buying projects. They'll still be buying copper projects. They'll still be producing cheap nickel out of Indonesia. They'll still be looking for lithium. Yeah. All that will still happen for them because they've built out a supply chain where the lithium batteries make sense because that's how they're building their cars. And for them, cost effectively, it makes absolute sense. So they'll still do it, but then they have to build up their domestic demand for those cars because the US has never been a market for them, but it's going to be less of a market for them.
So in a time like this where everything's so uncertain, what are you doing? What's your plan moving forward?
So, to my point earlier is that, I am worried about people on the cutting edge. And so I might retract and stick to more grassroots in terms of timeline, because I know there's problems with, like I said, with copper supply, and there's not a lot of good projects. So that discovery process has worked well for us. And so I'll go back to that and look in jurisdictions that have a multiple bid. So it's not just a Western bid, but it would be a Chinese bid as well. And I'll also be looking at, the impact of Canadian listing on these companies. On are they prepared for a Chinese bid if it happens? So that's the re-domiciling. So if you're in a place that could get dual bids, you have to, prepare yourself for that bid.
Sounds like you're shying away from North America in a way. You're getting to more.
Yeah, because now Canada, like the idea that, okay, the U.S. is going to come in and the Department of Energy and the Department of Defense, and they're going to do all these loans. I don't know if Trump's going to do that. I don't know if those loans are going to happen anymore, especially outside the U.S.
Yeah, it's up in well, I have heard that some organisations like the DFC have paused payments for companies.
So there was a really good presentation that I went to last year about the potential, like who was going to come in when we still didn't know. And the difference was that the Democrats were about energy transition metals, and they called that a critical. And they developed policy around that, whether it was the IRA, EV subsidies, DOE, DOD, XMIN, blah, 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 giving people money, lower cost of capital, switching to security minerals. And those would be the ones that China bans. So that's why antimony is so important. That's why rare earths are so important. But they're not talking about this with respect to lithium anymore. So something like Thacker Pass and the way that loan, I don't know if that'll happen again under this adventure. Something like the Lobito Railway that the U.S. invested in to get copper out of the Central African Copper Belt and take it through Angola, that's not going to happen. That hole in investment in places like Africa will be filled again by the Chinese. They'll come back. And they'll come back big.
So it's a shame in a way, isn't it? That
I have no opinion on shame.
No.
It's like, it's hard to, say which way you think one thing's going to go or how the world should be. So I don't opine on that. I just try.
No, I just think it's a shame that, well, maybe it's not a shame. I mean, it seems to me as though we're almost giving up on our ability to try. We were talking about earlier, we can't compete anyway, but it's almost as if we're just giving up now, isn't it?
Well, we've all tried to go, we're being forced, everyone to go into their own shell. Which makes it harder for resource countries that are not the end consumer, like Canada, potentially Australia, Brazil, the DRC. I mean, all these ones that are basically resource-rich countries. But because our problem in Canada is that we've basically said no to Chinese investment. So a lot of those uranium projects in the Athabasca Basin aren't getting built. Would the Chinese build them? Oh yeah, they would build them.
Oh, of course they would.
Yeah, but now we don't let them build them. But are we going to get somebody else to build them? Cameco won't even build them.
Is it not just the case that most countries now are going to just have to reinvest in bringing manufacturing and end products into their own?
Yeah, but I mean, a country the size of Canada or Australia, I mean, that's not what we do. I mean, we do have a manufacturing sector, but that's a branch economy of the U.S. But we don't make our own cars, just like they don't. We go back and forth with parts, and I have no idea how those 25% tariffs are going to go when you get a battery that goes to Canada, and then you have a part that comes back, and then so that's going to get tariffed maybe by Canada coming in, by the U.S. coming back, and then going back again, because some of these parts go back 3 times over that bridge.
Wow. Yeah.
I have no idea how they're going to implement this. So it's not just, oh, hey, here's some wheat. Okay, you importer, you're going to have to pay 25% more for that. And then you sort out who you're going to charge. It's not going to be that easy.
Yeah, okay. Yeah, it just seems odd, doesn't it? It just seems really, really strange.
Well, they're under the impression that this will generate funds for them to basically offset the tax cuts. That's one of the big revenue losses that will happen.
Okay, so answer is maybe for the time being, look at countries that can have dual bids, like you were saying, Chinese
and
or
infrastructure.
And infrastructure.
So if you continue to see what we're seeing now is that even though the gold price is going up, just still juniors and non-cash flowing companies having trouble raising money, then you want bang for buck. So when I say infrastructure, then maybe I'm scaling back from people in isolated places where it costs $1,000 to drill a meter. So if you're going to raise less money, I get less catalysts. So if I'm I want cheap cost of capital, meaning they know how to raise money, but also that money goes to a bigger bang for buck project. That's where you're allocating capital to.
Interesting. Okay. All right. Well, Joe, thank you very much for your time.
All right. Thank you.
Thank you.